Alright, hope everyone's doing well. This is going to be a video over a question somebody asked me. Sorry my voice is a little hoarse. went out of town, it was a little cold. The weather, just kind of weather change. It's just made my voice a little dry. But anyways, I wanted to release this to whoever the person is that asked this question or what you see on my screen. Go ahead and take some time to read it, and they know who they are, but I'm gonna go ahead and release this video just as a public video, but I'm not gonna refer to that person who asked it. And typically that's what I do. If someone asks it and I want to actually share it, I just don't mention the person. So if you ever want to ask something, I may or may not make it a public video, it just depends. But I won't make it a public video without taking out the person's name. Just probably the right thing to do. But anyways, first things first, this person bought the course in 2014 and been studying it off on. So number one, yes, you do have access to the new course. It's on the Brooks Trading course. I'm sure you're probably already looking at it by now. If not, highly recommend you do so. And if you don't have it, highly recommend it. I think it's like $250, $200, $200 or $300, I can't remember, but it's certainly well worth it. It's 120 something hours, so if you've studied out long enough, you know it's worth it. I've never seen him release something that was really below any pretty high standard that he has. I've never been disappointed with anything I've gotten from him. Also, I recommend the slides. They're about I think they're like $110 or maybe $150. I don't really remember, but there's like 2,500 slides. If you've been in the trading room, you've seen him display them. They're constantly updated. Great study tool. So this person's been trading small lots of the SPY, around 25 to 50 shares per trade. They set a goal for themselves that if they got their account from 0 to 350, they would double their position size. Okay, so this makes me think I got up to 330, but then it went back down to 0 and has been fluctuating since, not really losing or making anything. Yeah. And then this person says, after reviewing a lot of their trades, they see they could be quite profitable if they just do the right thing and stop taking bad trades. Sometimes, and then he replies, sometimes I'm a little slow to realize where we are in the market cycle and only to realize in hindsight. Yeah, so first things foremost, I think it's great that this person is trading very small lots of 25 to 50 shares. So if you're having trouble, if you don't have the 25, you got to have 25,000 in an account just to day trade because of the pattern day trader rule. You can look it up if you need to. It'll let you know if you need more information. So I would highly recommend trading stocks or Forex. Great way to trade small and risk a little. So first off, that's certainly the right thing to do, trade small. Yeah, and after reviewing trades, quite profitable if you just do the right thing and stop taking bad trades. Yeah, most people's losses, if you look at your trades, for most people's losses are due to, and when I say losses, overall losses are due to a small number of just, for no other way to describe it, stupid trades, where let's say this person, they risk 3 times more than their usual size, or they're risking $50, they have $40 of profit, and they let it go all the way back down. They lose their profit of $40 and lose $50 on top of it. So let me just let's just look for some examples. Kind of like saying, okay, bad trades. What's a bad trade? Well, buying this bar and then letting it ride all the way up to here, only let it stop you out down here. That's a bad trade. So first and foremost, what I would recommend is, well, let's look at the rest of it real quick. You got to study. Number one, get the new study course, learn every bit of it, because you have to. The more you know, the quicker you're going to be, the faster you're going to be to react. Number one, just can't stress that enough. And this person says they feel like they're overly focused on major trend reversals and that they take too many bad major trend reversal setups. Actually, I find a lot of my good trades from buy the close setups. For some reason, I also find myself trading always in the wrong direction and the prevailing trend. Yeah, so, and I think it might be a result of focusing too much on major trend reversals. I used to use really tight stops, but have recently started to sink in that wider stops equal greater probability. Yes, so this is very common and it's really simple. Today's a great example. The reality is, and I've done this 100 times, and I still learn from it today. And what that is, let's put it this way. A trader buys here, they take profits, and they quickly realize, hey, if I buy 100 shares at 74.10 and get out 50 cents higher, I can make $50. Well, how about if I trade 200 shares, then I can get out with 50 shares and I'll make $100 instead of 200. The problem is you make a little bit of real money and then you get that illusion, hey, let's make some more money. And you start to go, well, heck, if I buy here 200 shares and put my stop here below here, I'll lower my risk, have a smaller risk, and if I get stopped out, I won't lose so much. Well, you're lowering your probability. So what do I mean with all this? Okay, it's very common, especially with Forex trades. I see traders look for the small risk. And they go, oh, this bar's big, I don't want to sell that. Then we get 4 consecutive bars. The risk is all the way up here. That's too much risk. I'll wait to buy. I'll wait for a second entry. So he goes, high one buy. I won't take that. I'm smarter than that. Here we go. Here's an outside up bar. Surely we're going to test higher. I'll buy here. Failed breakout of yesterday's low. So what people do inevitably is they buy here because it's 70 cents risk and they can trade 100 shares. Instead of saying I'll sell here and risking 25 shares. So it just has to do with, it works two ways. Either, if this person is trading the E-money, then they're trying to minimize the risk because they're afraid to lose it. You're either doing these two things. You're either minimizing your risk because you don't want to lose money, or you're minimizing your risk so you can increase your position size and make more. Both are very dangerous, and inevitably both will ruin you. So what I challenge you, this person says, as soon as you mention that you feel overly focused on major trend reversals and taking too many bad ones and that you're making more money from buy the close, inevitably what they're saying is, hey, I'm realizing that I'm losing money buying this bar, but I find myself making money when I sell this bar or sell down here. Yeah, because really there's two trades. For most people, they should think of two types of trades. There's low probability trades and high probability trades. And typically with the low probability trade, such as buying above this bar, buying this outside up bar, or buying this bar. With the low risk trade, if I said low probability, low probability, low risk. Now let me back up. There's two trades. There's low probability and high probability. The lower the probability, generally the smaller your risk. The higher the probability, generally the greater the risk and the worse the risk reward. So if you're selling all the way down here with the stop up here, the reality is you have a terrible, just absolutely awful risk reward. But your probability is just incredibly high. Just to give you an idea, if there's someone stop us here, sold this close, that would be they had a 30% pullback from here. So just a 30% pullback, or drawdown, if you will. So the problem is most people need to think of things as either the low risk trade or high probability trade. The reason why most people, it's a simple fact. If you have less losing trades, it's easier to make money. It's simple, and everybody knows that. However, when you're over here, it just never looks good enough. It never traders are constantly, they see this and they're saying, it's a wedge bottom. We're breaking below a channel. Al says when you break below a channel, it usually reverses up in 5 bars, so I can't sell down here. Here's our second entry buy. We're reversing it back in the channel. I've got to get long. But what they fail to realize is we have a gap. And we're not closing this gap. So there's just no telling how low we could go. Also, we broke below a bottom, so we may fall all the way down here. Logical target, open, close, measure move. Measure move of this, you can call it a double top or a failed double bottom. It's just a break below support. We tried to form a bottom here. Theoretically, we failed. We should have. We broke below. So, my whole point is, everybody falls into this trap. Everybody wants to risk less because you can either lose less money or you can trade a heavier position with less risk. But whenever you lower your risk, you lower your probability. The reason why you're having difficulty with these major trend reversal setups and taking too many bad ones is because you're probably trying to lower your risk. You're buying here, putting a stop down here, not realizing tight channel, first low may fail and test down. You're buying here, not realizing that this is a minor lower high and we really need to break above this lower high. Even if we go above it, we'll probably turn down. So it's really easy to not realize how much you need to risk. So enough of all that. Here's the deal. I would become obsessed with the video course and learning everything about it. The more you know, the better you're going to be. It's that simple. As far as Al's trading room, I certainly recommend it. I think it's a great learning tool. Plus, you can ask any questions. Now, it's catch-22 though. Do you spend all day? Assuming someone can watch the market all day, then sure. The reality is, in a perfect world, you watch the webinar and practice trading from 8:30 to the close of the market. But the reality is most people can't do that. Second, you may be better off just watching videos right now. I don't know. It solely depends on how much of the video course you know. Now, with that said, I certainly would recommend the video. I'd recommend the trading room 100%. But first and foremost, there's like 127 hours. Sorry, my voice is getting a little hoarse. But there's well over 100 hours in the new video course, so you're going to have to watch it well more than once. and well more than twice. So right now I would just focus on the video course. Now, I think there's actually, I would get the video course, which you already have, and if you're willing to, I would get the trading room and watch the end of the day from 3 p.m. to the Central Time to the final 30 minutes of Al's video where he goes over the analysis and takes questions. I would ask him questions. So I hope this helps. Again, the reason is you're probably too drawn to small risk and trying to lower your probability, and instead of waiting for something like this, stop up here and holding. All right, so my voice is getting hoarse. I hope everyone has a good night.